What's up, Ape Nation? How's everybody doing today?
I want my fucking money. 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 I want my fucking money. Gary Gensler. I want my fucking money. Money. I want my fucking money. Gary Gensler. I want my fucking money. Gensler, I want my fucking money. 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 I want my fucking money.
Thanks for coming, everybody. Just getting a couple things finished up here. We'll be going in no time. Appreciate you for coming out, everybody. Give me one moment, please. Thanks for coming out, everybody. Give me 1 second. What is playing in the background? Appreciate you for coming out, everybody. Give me 1 moment. My own video. My apologies for that. I didn't know I had it open in the background. But hey, thanks everybody for coming out. My name is Marcel Kalinovic, Boss Blunts. We're going to be discussing the future of America's economy, the stock market. This is the due diligence on everything, and how it equals the mother of all short squeezes. Because it's going to be something special. It's going to be a special day for AMC and GameStop, or should I say a special month for AMC and GameStop when that finally kicks off, because it's a long time coming. What's up, Pete? Thanks for coming out. Appreciate you guys. Thank everybody. Thank you very much. Let's switch it up over here, all right? We're going back over to my computer screen now. For those of you that are wondering, this is personal consumption expenditures by state from 2019 to 2020. And personal expenditures decreased because Americans' personal savings is at an all-time low. Credit default swaps this year are up almost 3,500%. Equity return swaps are almost 5,000% up. This originally started as an investigation into the correlations between 2008 market crashes as well as the stock market crisis, debt ceiling crises that occurred in 2011 and 2013 in comparison to 2020 stock market crash of COVID and what we're seeing today. As of August 1st, we entered a new debt ceiling crisis with Congress. At the time, they were on a vacation. A lot of us know what happened. But at the end of the day, Democrats had over 11 weeks to get everything hashed out through reconciliation and were unable to raise the debt ceiling. They had to beg and fight with Republicans in order to get an agreement, in order for them to raise the debt ceiling by only 400, not even that, I misspoke, to get them to extend the debt ceiling through December 3rd in order to prevent the government, to keep the government funded, and they only gave them $480 billion. The United States government spends $502 billion on average, but only has an income of around $200 billion, a deficit of $300 billion per month. Feel free to drop a like, drop a chat. I appreciate it. It's not for me. It's not for my ego. It's for the algorithm. So in August of 2011, during the debt ceiling crisis back in 2011, CBO, the Congressional Budget Office, projected that the federal budget would show a deficit of close to 1.5 trillion. 1.5 trillion. Or only 9.8% of the GDP. That was pretty low. And at 13.4% of the GDP today, the deficit in 2021 would be the second largest since 1945. Exceeded only by the 14.9% shortfall recorded in 2020. Well, we're going to come back around to that, I assure you. For the period of 2009 through 2019, real GDP increased at an annual rate of 2.3%. Okay, that's pretty standard. But for the period of economic expansion from the second quarter of 2020 through the first quarter of 2021, real GDP increased at an annual rate of 14.1%, which is almost entirely due to the fact that the government printed an insane amount of money, provided way too much in COVID stimulus to the country in the form of PPP loans to businesses and stimulus payments to Americans, to the point where our entire GDP is artificial at this point. Cheers, everybody. I'm going to have a little Dewars during this one because I don't even want to talk about this shit without having a drink. It's fucking depressing. I'm not even kidding. CBO estimates for 2011 would be absolute heaven compared to what we're seeing now. They were projecting in 2011 that the 3-month Treasury bill today would be worth 4.4%. 4.4% they were predicting that the 3-month Treasury bill would be worth today. It's worth 0.04. Fuck. In 2011, the projected 10-year Treasury note bill rate was projected to be 5.4%. The actual 10-year Treasury note bill today is 1.56. Jesus Christ. Their estimates are always wrong. Their projections are always wrong. A report by the Bureau of Economic Analysis shows that the second quarter of 2021 was a complete fucking bloodbath in terms of loss of income and loss of savings and increased expenses for average Americans. Period. Okay? And it's worse in August. The third quarter is worse. I'll show you why. With proof from the Bureau of Economic Analysis, the U.S. Department of Commerce. Personal income, current dollar personal income decreased to $1.32 trillion in the second quarter. Decreased by 22%. 22% it went down, current personal dollar personal income in the second quarter. All right, it had increased in the quarter prior by 56% because of all the amount of stimulus. And when that was taken away, it went down by 22%. And personal consumption expenditures by state are down heavily all around the country, not because Americans don't want to spend money, because Americans don't have any fucking savings left. What are personal consumption expenditures? The term personal consumption expenditures refers to a measure of inputted household expenses defined for a period of time. Money out the fucking door. Period. Personal income PCEs and the index are released monthly in the Bureau of Economic Analysis and their income and outlays report. Now that that's out of the way, you know what it is. Get a good look at this. Personal income and outlays for August of 2021. Personal income increased 0.2%. That's a nominal, almost zero change in August. Okay. Disposable personal income increased 0.1%. Okay. Sounds pretty nice, doesn't it? Not really, and I'll explain why. Because in the first quarter, even though in August it went up 0.1%, disposable personal income decreased $1.42 trillion, or 26.1% in the second quarter of 2021. So we lost over 26% of our disposable personal income in the second quarter of 2021 and gained back 0.1%. Does that sound like a pretty good economic indicator? You lose 26% over 3 months and you gain back 0.1 over another month. Does that sound like a positive news? I don't think so. Real disposable personal income decreased 30.6% in Q2 in contrast to an increase of 57.6% in Q1. All right. What else went up? Personal consumption expenditures increased $130 billion, almost 0.8%. So your disposable personal income went up by 0.1. However, the amount you have to spend went up by 0.7% more. Real DPI decreased 0.3% in August, and real PCE increased 0.4%. That's expenses, by the way, okay? Expenses are up month over month over month, while the amount of income is down month over month as well. Let me make this a little bit larger for you guys so you can see this if you want to. The increase in personal income in August primarily reflected increasing compensation of employees and government social benefits. Government social benefits. That's where the increase in personal income is coming from on these charts. Are you getting government money? I'm not. A lot of people are getting government social benefits, and more power to them, I guess. Within compensation, the increase primarily reflected increase in private wages and salaries. However, within government social benefits, an increase in other social benefits reflecting child tax care credit payments authorized by the American Rescue Plan was offset by a decrease in employment insurance. So they're still giving out a shitload of money for stimulus. There was a $130.5 billion increase in personal consumption expenses in August. Do you have money that you don't need? Because I need every fucking dime that I have. Every single dime. Okay? And disposable income, according to the government, is money considered as non-essential. That decreased by over $890 billion in the second quarter. And at the same time, in the first quarter, personal expenses went up $538 billion. In the second quarter, they went up an additional $681 billion. And in August, it went up another $130 billion. These are your expenses. These are my expenses. Every American. This means that expenses have increased by over $150 billion on average from quarter one to quarter two. And we're going to see something very similar for quarter three. Okay. Personal outlays increased $132 billion in August. Personal savings was only $1.7 trillion, right? In the first quarter of 2021, Americans had $4.07 trillion in savings and investment accounts. By the second quarter, it had been cut by more than half to $1.97 trillion. That was the second quarter. That's the end of July. Guess what happened in August? Americans' personal savings is $1.71 trillion. And the personal savings rate is down to 9.4%. Personal savings was down 9.4%. Yeah, great. So aside from that, personal outlays and expenses are at record highs. Savings are at fucking record lows, like we haven't seen in a long time. And the PCE price index for August increased by 4.3%. Holy shit. If you're not concerned, I don't know what's wrong with you. You're either completely fucking stinking rich and you don't give a shit what's happening in our economy, or you're just too stupid to understand. Now, I don't want to be considered, scaremongering or fear-mongering here. But these are flat-out exact numbers given to us by the United States Bureau of Economic Analysis, the Department of Commerce, Office of the Comptroller of the Currency, the Federal Reserve. This is all things that are being given to you flat out in the open and nobody's paying attention. All right? Personal savings rate as a percentage of disposable income was down 10.9% in the second quarter and was already down 20.8% in the first quarter. Aside from that, PCE is up in August another 4.3%. Right? So Americans lost $2 trillion in quarter two, and then they lost another $24 billion. Americans lost $24 billion in August alone. Fucking shit. The price index, inflation, was up 5.7% in the second quarter. Yeah, let's move on away from this one here. Personal consumption expenditures, up. At levels we have not seen in a long time. Look at that. Let's move on. This is a real GDP. Again, all fake money. All fake GDP based off government spending and stimulus spending. So yeah, in the first quarter, real GDP increased 6.3% based off of what I told you earlier. The increase in real GDP in the second quarter reflected increases in personal consumption expenditure. The GDP is up because you're spending more money to survive because of inflation. Because the value of the dollar is down. The GDP is not up because the economy is strong. It is up because inflation is out of control. Non-residential fixed investments, exports, and state and local government spending were increased. Right? Surprise, surprise. State and local government spending were increased. It was decreases in private inventory investment, residential fixed investment, which means homes, and federal government spending. Because the federal government had to stop spending because they couldn't get through the debt ceiling crisis without cutting spending. Imports are a subtraction of the calculation of the GDP. Okay, the increase in the personal consumption expenses reflected increase in services, which means food and accommodations and goods cost a lot more money. Okay, plain and simple. The price index for gross domestic purchases increased 5.8%. The amount of money you spend. Okay, and the PCE price index increased 6.1%. That's month over month. So every month for the last several, your expenses have gone up by 5.4%, 5.4%, 5.4%, 5.8%, and now 6.1%. We have not seen anything like this since 2008 market crash or prior. Plain and fucking simple. Drop a like, please, for the algorithm so other people are aware of this nonsense going on in our fucking government. Real gross domestic income increased 2.3%, which really doesn't mean shit at the end of the day. Because the amount of people that are working is down heavily. This is the total deficits, primary deficits. We are looking just as bad as we did right before 2008 and 2020. That's the only other times we've been at this levels. All right. Not to mention the 80s, during the crash of the 80s. Federal debt held by the public totals 103% of the GDP. This is the debt that you hold now, and this will be projected to continue a nice upwards arc. Okay. Now, they continue to say that as the pandemic eases and the demand for consumer services surges, that real inflation-adjusted GDP and CBO's projection grows. However, we know that hyperinflation is here to fucking stay. It's not transitory. That's a bunch of bullshit. There is no increase for demand in consumer services surging because Americans have lost trillions of dollars in because of the personal expenses and trillions of dollars in their savings account, as just proven to you. This is the consumer price index for all urban customers. Look at what happened in 1971 when Nixon separated us from the gold standard. We had a slow upwards trajectory that became basically an accelerated arc. This is the consumer price index. So while inflation is up 274% compared to what it was then, or 274 times for all items in the U.S. city average, earnings are nowhere near this rate. This is the latest numbers just for September alone. Okay, 5.4% since September of 2020, up 0.3% more this month than last month. Okay, over in the West, U.S. city, 5.9% for all items. Plain and fucking simple. This is a 12-month percentage change, consumer price index for selected categories. All items, food, energy commodities are up over 40%. Can you say manufactured energy crisis by Russia? Can you say the new Enron, which would be, in my opinion, Citadel Energy Marketing? Because Citadel Energy Marketing, who in 2015 was involved in a lawsuit for misappropriation of investor funds. I think his name was John Dotson. You can find him in a previous video. Citadel Energy Marketing has hired all of the vast majority of the people that used to work at Enron. Professional crooks. And, they're taking advantage of 41% increases in energy, 42% increases in fuel and oil, 42% increases in gasoline. Ooh, that was a big swig. It tastes good. And here you go. Energy commodities up 41%. Fuel, oil, 44%. Propane, kerosene, firewood, 38%. Motor fuel, 41%. Gasoline of all types at the same time. Furniture is up 14%. Let's see what this is. Can you believe it? Laundry equipment, major appliances, 29%. Major appliances, 12%. Everything's more expensive now. Even men's pants and shorts are up 11%. Transportation is up 13%. Used cars and trucks are up 21%. Anything over 40% is considered hyperinflation levels. All of our energy is in hyperinflation right now, and it's going to get out of control. Lodging, away from home, 21%. Motels, everything, Airbnb, etc., 24% increase in price. Car and truck rentals are up 31%. You don't got to be a fucking genius to figure out that even riding on a goddamn cruise ship is up 10%. The only thing that's down is airline fares. Surprise, surprise. This is a 12-month percentage change for Consumer Price Index. Here you go. So you can see, in case you're wondering if this is high, the only time it's been higher was right before the 2018 market crash and right before the 2008 market crash for gasoline prices. The last time energy was this high, July 2008. The last time natural gas was this high, looks like July of 2008. Are you noticing a trend? This is a report from the Office of the Comptroller of the Currency. This reports improvement in mortgage performance. Wow. Has there been improvements in mortgage performance? Let's take a fucking look at that. Luckily, 95% of mortgages included in this report are current and performing, all right, compared to 91% at the end of the second quarter of 2020. Unfortunately, a lot of people are still seeing the benefits and reaping the benefits of the eviction moratorium. The reason that that's unfortunate is because that number will soon escalate, and I'll explain why. The percentage of seriously delinquent mortgages was 3.8% in the second quarter of 2021 compared to 4.6% in the prior quarter. In the prior quarter, the eviction moratorium was still in place. And a year ago, it was still being put in place. Servicers initiated 592 new foreclosures, which is not really very important. However, servicers completed almost 40,000 mortgage modifications. That means refinances. Almost 40,000 people refinanced their home in the second quarter of 2021. That is a decrease of 17% from the previous quarter. The reason for that decrease is because less people are seeking out to refinance their homes. That's bad. That's bad. That means that mortgage rates are going up and less people are buying. %97 of those were combination modifications. Okay, that means that the majority of the money that was used for that the people didn't have to pay out of pocket, that the lender had to foot the bill, had to eat some cost in order to make that refinance happen. All right, 53% reduced the borrower's monthly payments. That means people are taking longer terms. Instead of taking a 15 or a 20-year loan, people had to extend them to 30-year loans. Over 53% reduced borrower monthly payments. And the only way to do that without putting a significant amount of money down, which we know Americans can't do because their savings has decreased by over $2 trillion, which is about 55% in the last 2.5 quarters. This figure, too, shows the number of first lien residential mortgages serviced and the decline in loans from the second quarter of 2019 through the second quarter of 2021. This is the number of loans, residential mortgages being written the new mortgages, not the applications, the new mortgages actually being given. Do you see a trend here? I mean, really? Do I have to point it out? Do you see a fucking trend here? So, in 2019, we were servicing 16,250 mortgages. And even in the middle of COVID, we were seeing almost 15,000 mortgages a month. And that's in thousands of thousands. So for you, those of you that need to understand, 14.952 million. In the second quarter, that was 12.775. That's a decrease of over 2 million mortgages, almost 2.25 million mortgages less in the second quarter of 2021 than there was at the peak of COVID in the middle of second quarter 2020. And as you can see, that number is not increasing. All right, and as a percentage right there, that's about 15% less mortgages now than it was occurring last year. It's not a great fucking sign. Loan risk and loan risk category. Luckily, loan risk is a little bit lower. It's not saying a whole lot. But, yeah. The number of subprime loans to be reduced is, by percentage, much lower than the number of other loans that were reduced. So the borrower risk for subprime loans remains high. And for prime loans, of course, remains the highest. New home purchases. This is an October 20th article by the National Mortgage Professional. NationalMortgageProfessional.com. New home purchase applications fell more than 16% in September of 2021. Why? People aren't buying new homes, and they're not buying used homes either. Plain and fucking simple. Single-family homes were running at a seasonally annual adjusted rate of 843,000 units in September. The new home sales estimate is generated by mortgage applications. All right. That's a 3.5% decline from August on new home sales. All right. That's down 7% from 71,000 new home sales on an unadjusted basis from last month. 7% from last month on new home sales reduced. And millions of less mortgages being written and serviced in the second quarter of 2021 as well. That's for new and existing homes. This is from the tradingeconomics.com. This is the United States mortgage applications. Mortgage applications in the United States dropped 6.3% last week. Reversing from an increase last week of 0.2%. So, not looking good. Applications to refinance declined 7.1%, and those applications to buy a home declined by almost 5%. 30-year fixed mortgage rates continue to rise to 3.25% almost. I guess I got lucky locking in when I did as well back in January. Refinance applications declined as well. This is the lowest level since July of 2021. Right? Cool. For those of you that are unaware, Zillow is no longer purchasing properties. So they were helping to keep our real estate market afloat. Zillow is no longer purchasing and selling residential real estate as of this month, because beginning a few months ago, they started losing money on every home, or on the majority of homes, as opposed to making money. So they just decided to get away from it entirely.
Did you actually hear what they were doing?
Yes, please explain. Hi, Kenna.
Hey.
I did. Yes, please explain, because I need a drink.
So Zillow was actually going through different communities, like they had their analytics and everything, because everybody uses Zillow. There was a whole big TikTok. They got called out on this a couple months ago, and I actually addressed it when it came out. But they were going in. They were using all these analyticals because everyone gets on Zillow to look at houses, and they go through and see what people are actually able to afford, right? Sorry.
You're
but
fine.
They would see, okay, maybe like for the example that this person did on TikTok, like they were like, oh, these people are looking for $300,000 homes, blah blah blah, or sorry, that the people could afford $350,000 homes, and so they were going and buying these houses for like 300,000, and they would do this for like 30 homes or something like that, and so the 31st home they'd actually go through and they'd end up buying it for like 340,000,
Right.
and
Absolutely.
so that now changes the metrics for the area, because now the houses are now worth more, and they were propping it up and propping it up and propping it up, and so those
Artificially
first 30
raising
homes,
prices of homes in the area.
exactly, and
So
they were
even the
paying
homes that
cash.
they're not buying are still valued more because all the other homes that were bought up by Zillow and BlackRock and other investment firms like Bill Gates buying up land, that helped keep up, they
The
were
market, yeah,
comparables. And as
yeah,
comparables, they kept up the value of your house. Zillow
and
is
they were
no longer
paying,
doing that. That means you should start seeing a decline in real estate values.
which we are, and so, and what was interesting is since they're paying cash, they didn't have to go through all of the rigmarole of getting inspections and all this other stuff, and so they
Yes,
would
with
buy they,
cash, who gives a shit if
yeah, yeah,
there's no lender there to turn you down if there's something wrong with the property. You're paying cash, so it could be a complete dump. As long as you're getting a good deal, at the end of the day, it doesn't matter. They could do whatever they want with the property. They could flip it, they could rent it, they could keep it long term. Anything they want to do, keep it on their books as assets under
yeah,
holding companies.
and I think what it came out to is like the first 30 homes that they bought for 300,000, now they're valued over 340 or whatever. They're valued way more than what they paid for, and they just made like $1.2 million on those houses once they sell them.
Yeah,
So it was just craziness. So yeah, I wanted to
that's a
chime in
massive
because
amount of money. You're right. At the point where they were making tons of money off this real estate. Now they're losing money on it because they have to hold it longer. So, and that's proven by the information that we were showing you here in the reduction in new and used homes and mortgage applications and mortgage loans serviced, and the decline in loans from second quarter of 2019 through the second quarter of 2021. So thank you, Kenna, for that information. That was fantastic. That fits in
no problem.
perfectly. I would like to thank Kenna from the Bull House joining us here tonight on Boss Blunt's Think Tank, as well as Silverback and Zabi. Feel free to jump in anytime. I appreciate you guys. By the way, Zabi's the genius who made our Gary Gensler song. So I got him to thank for this wonderful piece of music that I absolutely fucking love. Because I think we're all going to be absolutely fucking stinking rich. Holy shit.
Hey man, what's up, boss? Thanks for the shout out, man.
Oh, nice shit, man. You're awesome, brother. Thank you so much.
You're awesome as well.
Good looking out, brother. So yeah, anyways, we're on moving on to so much shit here, guys. We're halfway through the DD here, and I thought this was gonna be a quick session. Well, I'm 33 minutes in already. Why can't I make 11-minute videos like the rest of these fucking YouTubers? What the fuck? I'm trying my
Because
hardest to get through this quickly as I can. But you know what? Maybe it's because we've actually got real information and not regurgitated bullshit that other people are coming up with and finding on fucking Reddit
Hey
threads.
man,
Because my Reddit threads
I've
are my own.
unearthed some pretty epic shit regarding cycles in the market.
Oh, brother, I would love to hear your cycles. Would you mind giving us a run through of your cycles? Could you get that ready while I finish up here? I should be finished in like 15 minutes.
Yeah,
I would love that,
yeah,
dude.
sure, man.
Kick ass. You guys are in for a treat. We're gonna finish the other half of this DD. It's the due diligence about everything, and it literally is gonna be everything because we're gonna have fucking technical analysis from
Oh
the one and
man.
only Zabi here in a little while coming up. Emergency
Sorry.
bans on evictions and other tenant protections
You have
related
no
to
idea what's about to
coronavirus.
hit you, man.
I love it, brother. So the federal government, the CDC's eviction ban is no longer in place. Okay, many people challenged it, and the U.S. District Court of the District of Columbia agreed that the order was unlawful. They left it in place, and eventually the U.S. Supreme Court lifted it on August 26th. Ever since, things are going downhill. Okay, this is state eviction protections. You're going to tell me that the states are protecting people? Alabama, no. Alaska, no. Arizona, Arkansas, California, only one are shut off. Colorado, no. Connecticut, Delaware. D.C., the tiny District of Columbia, says yes, please see notes. Florida, Georgia, Hawaii, Idaho, no. Illinois, Indiana, Iowa, Kansas, Kentucky, Louisiana, Maine, every goddamn state. No, Minnesota, they have an eviction off-ramp law. Bullshit. Mississippi, Missouri, Montana, every goddamn state. Missouri has some minor shit with a bunch of stipulations. Low or very low income are protected from eviction for non-payment of rent through December 31st, 2021. But after that, fuck you. See what happens next year. Good luck. New Mexico, minor things here. So as you can see, all of these are still no. Washington, minor. None of these fucking states are helping people. And the government hasn't even dished out that money. They promised over almost $90 billion, and they've only given about $15 billion. Because they don't have any money to give. United States Treasury has less than $480 billion to last through December 3rd, and all of that's already been allocated. On top of that, you got a backlog of cargo ships at the Southern California ports reaching an all-time high. Ask me how I know. I own 2 fucking logistics companies. I deal with this every single day of my life. It's at an all-time high. There were over 100 ships. This is a picture that I took 2 years ago of, this is a promotion that I made for my company. I'm showing people how we track them. One of my companies is named Shot Expediting Logistics. This is what LA and Long Beach looks like. These are the number of vessels on average. You see that? There's about 25. This is what it looks like right now. Let me zoom in for you. These red zones are travel areas, for those of you that are unaware. I'm in Michoacan, so excuse me, I got to back up a little bit. I went too far south. Let's zoom into LA LGB port. You guys notice anything? You guys notice anything? Let's put this shit side by side. Again, picture 2 years ago when things are normal. And a picture of right fucking now.
Did you hear about what our governor here in Florida said?
Yep. This fucking idiot in Florida thinks that we're going to take all of our fucking container ships over there, right?
I mean, it's a possibility. Oh, granted, it might backlog a few other things, but yeah.
It doesn't make a difference. Truckers don't like going to Florida. There ain't shit in fucking Florida. There's no goddamn backhauls coming out of Florida, and there's hardly any freight going to Florida. Because everything that goes to the ports gets put on the rails. So if something goes to the ports in Florida, there's not enough local drayage truckers in Florida to handle it anyway. And even if there is, there's not enough chassis to handle the containers for them to use to go take their power units, pick up the fucking chassis at the depot, drive it over to the port in Florida, have the container loaded onto the back of the chassis, deliver it onto the train yard, or directly put it directly onto the train, or deliver it out for long delivery. Because they don't fucking do long distance drayage anymore. Companies are only doing short distance drayage under 100 miles nowadays. So there's not 1, not 2, not 3, not 4, but 5, 6, 7, 8 different things. And then there's no fucking long haul truckers in Florida to come out because nobody ships things into Florida, for the most part, with the exception of oranges and some produce coming out of those via reefer trucks during the middle of the summer. It is not exactly the season for reefer or dry vans to be traveling into or out of Florida, let alone drayage companies or power units that can't handle it. In addition, in California, now independent contractors can no longer work in California's ports. So even though they're open 24/7, there's 750,000 less truckers that can pick up at LA and LGB ports.
Are you okay?
That's fury right there.
Look at this. Are you fucking kidding me? Look at this. This is what LALGB looks like right now. Over 100 fucking ships. And this is what it usually looks like. 20 to 30 ships. This is going to take 4 years minimum. 4 fucking years to clear this shit up. I'm not shitting you. And guess what else? 4 million Americans quit their jobs in July. 266,000 quit their jobs in April. 4.1 million quit their jobs in August. Okay, so who gives a fuck if unemployment is down? Unemployment is down because people can't file for unemployment because they quit their jobs. So they don't. Why would they go to the fucking unemployment office, stand in line for 4 to 6 fucking hours to not qualify? Only 58.4% of Americans. Only 58.4% of Americans that are qualified to work between the ages of 16 and 65 are currently working. 58.4% of Americans. Do you think they can clear this up anytime soon?
Oh, hell no. It's a
The
big hell no.
The number of job openings decreased by 659,000% in August. And that's really bad because that means that companies are going out of business. Because Americans are quitting their jobs in record numbers. They're not exactly taking on new jobs because only 58.4% of Americans are employed. I'm skipping that. I don't want to talk about that anymore. Then you got this asshole over here. Manchin climate stance threatens to become a problem. And it is going to be a problem for progressives. His refusal to support it's the centerpiece of Biden and the Democrats and progressives agreement. Bernie is going to hold this over their fucking heads. Bernie Sanders is going to dangle this shit over Pelosi like you have no idea. And if the Democrats get a couple of Republicans to play ball, the progressives are going to back out if this shit's doesn't stay part of the fucking bill. Then you got Charles Schumer over here trying to pass, his strategy for passing the agenda was based on the expectation that Manchin was going to give to ground. Manchin said, fuck you. Manchin said is not going to play those games. He is a Democrat. He's basically a Republican. Manchin would do so in exchange for their support of the hard infrastructure bill that he and Senator Kyrsten Sinema negotiated with Republicans. Okay, and they also don't want to take. The progressives aren't going to take the massive $1.9 trillion or $2.2 trillion cuts. Manchin's infrastructure bill has passed the Senate, and he's still not signing on to the climate investments that are a key demand of progressive Democrats. Bernie and company. His staunch opposition to a $150 billion clean electricity plan puts what was supposed to be a grand bargain between moderate and progressive Democrats in danger. It's no longer a fucking bargain for these guys. Because it's not just $150 billion, it's hundreds of billions of dollars that they're spending. Without Manchin, Democrats won't have the votes in the Senate to pass the $2 trillion and $3 trillion social spending packages. So not only do they have the infrastructure, they also have social spending packages that they're trying to pass. So they're gutting the bill's climate provisions, and that would completely risk the Democrats losing all the progressive votes like Bernie fucking Sanders and company for the reconciliation bill. So they can't do this by reconciliation. They can't do this with the Republicans. And they can't get the $1 trillion infrastructure bill passed, let alone their other social bills passed or the debt ceiling raised or an agreement at that point. Manchin has argued that he and Sinema aren't the only obstacles to those proposals, noting that there's universal opposition from Republicans, obviously. This is the congressional calendar for 2021. They go on vacation December 10th. Let me scoot that shit over because you can't see that. That's December. See these days that are in white? Those are days that they're not in session. In November, in case you can't see that up here, House in session on blue days, Senate in session on red days, House and Senate on purple days, and white days are vacation days. So when you take a look at, we're already reaching, there's only 1 week left in October here, a whole week off here. There's a 13-day United Nations sponsored climate agreement, meeting happening, and then they've only got a couple of weeks here that are actually purple. There are less than 30 days for these assholes to agree on all of these different packages and debt ceiling issues. Senate Republicans again block a sweeping voting rights bill. I made a video about this a little earlier. I'll recap it. Senate Republicans blocked the voting rights bill on Wednesday, which will increase the pressure on Democrats to do away with the filibuster, but they can't because they need Manchin and Sinema in order to get rid of the filibuster, and they've said that that's not going to fucking happen. They lost 49 to 51 along party lines. Chuck Schumer switched to vote no at the last minute in a procedural maneuver that will allow him to bring up the bill again for a vote. Because the filibuster requires 60 votes to proceed, Republicans succeeded in blocking the measure. That was the Freedom to Vote Act. It imposes new guardrails on the democratic process and amounts to the most significant overhaul of U.S. elections in a generation. It requires every state to automatically register voters at motor vehicle agencies, the DMV, the BMV, whatever you call it, depending on your state. They offer 15 consecutive days of early voting and allow anyone to request a mail-in ballot. It would also set new standards to ensure voters are not wrongfully removed from the voter rolls. Some of which sounds good, some of which sounds really fucking bad. Like there could be a lot of fraud there really quickly. Speaking on the Senate floor after the vote, Chuck Schumer criticized Republicans after opposing the measure and strongly hinted Democrats would move to change the rules. However, they can't fucking do it because they don't have the votes. Plain and simple. Especially now without Manchin. The blockade will put immense pressure on two of the most significant remaining Democratic holdouts, Joe Manchin of West Virginia and Kyrsten Sinema of Arizona. There will be particular scrutiny on Manchin, who personally helped write the revised bill and has been seeking the GOP support. But they're not going to be working with Republicans any longer. I assure you that. There's only a few paths to raising the debt ceiling. Democrats and progressives are basically trying to get a $5.5 trillion state welfare package passed. Republicans are refusing that. Congressional negotiators are seeking to cut the overall size of the 10-year package in coordination with the White House to between 1.9 and 2.3 trillion. Progressives are refusing that, so we're going around in fucking circles. Afterwards, they've got to work on the $3.5 trillion infrastructure bill, only 10% of which is actually related to infrastructure. All right? There are three different paths. 50 Democrats and progressives, which includes Bernie and company, and 10 Republican votes additionally in order to proceed. Or they can have unanimous consent by all Republicans, not fucking happening. Or they can have majority in the House and 50 Democrats in the Senate, plus Kamala Harris's tiebreaker vote. But if we had 50 Democrats and 10 Republicans to proceed, all Republicans in the House of Representatives voted against raising the debt ceiling. We already know this. All Republicans in the House voted against raising the debt ceiling, showing support for McConnell and Republican opposition. So what does that mean? McConnell and Republicans will not support the debt ceiling increases because of Schumer's poor choice of speech, basically trying to make Republicans look bad. Reconciliation takes a very long process. Previously, Schumer had 11 weeks, and he was complaining that it wasn't long enough. Now they've got less than 30 fucking days to actually work on it, and there's no way it's going to happen because it's a minimum 2-week process. Republicans can use floor amendments like the filibuster we just saw on Wednesday, and the filibuster would cause measures to be passed, and now they have to be run through the House again. Another beautiful time waster. Democrats can nuke the filibuster, but all 50 Democrats must support. And what do we know about that? Manchin's a fucking Republican dressed in blue. He's not going to go for that shit, right? All Republicans in the House of Representatives voted against raising it, period. And any way you look at it, it's in the same fucking circle. Because even if the unanimous, you're not going to get unanimous consent because McConnell Republicans will not support it. And you know that you're not going to get majority in the House and 50 Democrats in the Senate plus Kamala Harris's vote through reconciliation because it takes an extremely long fucking process. And they can only use that one time. So if they use it on the infrastructure bill, they can't use it on the debt ceiling anyway. They are fucked. What happened on Black Monday in 2011? August 2011, when U.S. and global stock markets crashed following the Friday night credit rating downgrade by S&P Standard & Poor of the United States sovereign debt from AAA to AA+. It was the first time in history the United States was downgraded. All right, Moody's issued a report during morning trading which said their AAA rating to the U.S. credit was in jeopardy after issuing a negative outlook the previous week. By the market close, Dow Jones lost almost 6%, making it the 6th largest drop in history at the time. Black Monday will follow just one trading day behind the 10th largest drop of the Dow Jones in August. All right, what happened? U.S. President Barack Obama attempted to calm the markets during a speech in front of the White House, but the Dow lost 200 more points within 20 minutes after he finished his fucking speech. The NASDAQ fell 7% almost, and the S&P 500 lost almost 7% as well. The NYSE, New York Stock Exchange entirely, lost over 7% as well, and the Dow Jones finished almost 6% down. That's a hell of a fucking day on the markets, isn't it? And the economy and the real estate market were extremely strong in 2011 compared to what we're seeing now. We have none of the fucking parachutes that we had at that time to keep our country afloat. If that doesn't happen, if the mother of all short squeezes isn't caused directly by the stock market collapse and assets causing liquidations, margin calls, and margin defaults on junior hedge funds, senior hedge funds, broker dealers, prime brokers, then other things will, like NFT tokens on AMC and GameStop, or NFT dividends, cryptocurrencies. AMC is now listed on Coinbase. This is the AMC Entertainment Holdings tokenized stock, FTX. Not currently for trade yet, but it's already up there. This is on Coinbase, available right fucking now. Okay, so you guys can check that out. Go check out your local apps, your local crypto apps, and see if you can find it. What makes me so confident? What makes me so confident that, unfortunately, the stock market's going to collapse? It's literally due to the fact that the total notional amounts of derivative contracts for companies like JP Morgan Chase, Goldman Sachs, Citibank, Bank of America, Wells Fargo, and State Street exceed, $400 trillion. Well, when you add into account their holding companies as well. But their assets are only a small fraction of that. They are over leveraged over 10 times. These numbers are in millions of dollars. So what you see there that says 3 million, that's actually 3 million millions, which is $3 trillion. And the number here that says 53 million, that's in millions of millions. So that's $53 trillion, 182 billion, 124 million dollars that you're seeing right there. Okay, that's how large these derivatives are. This is for the top 25 commercial banks, not including their holding companies. For those of you that are unaware, a holding company, according to Oxford Dictionary, is a company that is formed to buy shares in other companies, which it then controls. Right? Pretty fucking simple. Now you got to take a look at their holding companies as well, and they're in just as shitty of assets and liabilities, over leveraged 10 to 40 times over. Look at Goldman Sachs. They've only got $1.3 trillion in assets, but have $43 trillion in total derivatives. Why is this important? Because they have $426 trillion in total derivatives. I don't know exactly, but I think that's like 30 times the world's gross domestic product. 30 times the world's gross domestic product. This is the second quarter 2021 quarterly report on bank trading and derivative activities from the Office of the Comptroller of the fucking Currency for trading revenue. Want proof that banks are hurting? Yeah. Big fucking profits? Watch this. 4 large banks hold 88.7% of the total banking industry notional amount of derivatives out of 1,372 insured banks. All right. Derivative contracts are the interest rate products, the largest amount, which represents 72.6% of total derivatives. The percentage of centrally cleared derivatives, quarter over quarter, increased to 39.5%. That's not good. That's lit exchanges. Only 39% of shit is going through lit exchanges. And the other 61% or 60.5% is going through dark pools. Trading revenue in the second quarter of 2021 decreased by 40%. Okay? 40%. You don't got to be a fucking genius. This is directly from the Office of the Comptroller of the Currency. Trading revenue in the second quarter 2021 decreased by 40.9% compared to the $13.6 billion reported in the second quarter of 2020. Losses. Plain and simple. This is the executive summary of this report. All right. The insured commercial banks reported trading revenue of $8.1 billion in the second quarter of 2021. That's $2.4 billion less than the previous quarter and $5.6 billion less, 40.9% less than a year earlier. See, so down 22% in the previous quarter and down 40% from a year ago. Credit exposure decreased only 1.1%. So their revenue decreased by almost 41%, but their credit exposure to derivatives has only decreased by 1.1%. That means that they have a very high risk and their revenues are dropping quickly. Simple. Derivative notional amounts decreased in the second quarter by 2.9%. Fine. No problem. No problem at all there. They reported $8.1 billion. That's, again, down 22.9%, down 40% from the year. The quarter-over-quarter decrease in trading revenue was due to decreases across all trading instruments, except interest rate contracts. Reverse repurchase program, RRP, interest rate contracts. That's the only fucking thing they can do. And ISDA contracts. To manipulate fucking contracts with. Up 8,000%. 8,000% in one quarter change. Okay? You don't got to be a fucking genius to see what's going on here. When was the last time that they were up like this? 2008. And again, total trading revenue down $2.4 trillion. Forex down $4.7 trillion. It's all going into fucking here now. Total holding company trading revenue down $3.4 trillion. Even worse than the banks. So they make it look pretty bad when they tell you that the banks are down $2.4 trillion, but they don't tell you that their holding companies are down an additional $3.4 trillion. That's over $6 trillion in losses by these fucking banks. In the second quarter of 2021, banks generated 34.2% of consolidated holding company trading revenue, which is a decrease of 38% for the quarter. So not only are the banks down 40%, their fucking holding companies are also down 38.7%. That's a lot less getting sent overseas. Morning, everybody. Thanks for being here with me. It's good to see you all 300 of you. Appreciate you for coming out. Their credit risk has not differed much. Okay. The credit exposure is bilateral in most derivative contracts, such as swaps, which make up the bulk of the bank derivative contracts. All right. Measuring credit exposure in derivative contracts involves identifying those contracts on which a bank would lose value if the counterparty of the contract defaulted. The total of all contracts with positive value to the bank is the gross positive fair value and represents an initial measurement of credit exposure. So for those of you that are unaware, positive fair value means losses. Negative fair value means assets, liability, not the opposite of liabilities, assets, okay? And I'll explain that here. A legally enforceable netting agreement. This is something that banks use in order to rehypothecate shit to the point where it makes their books look clean. This is them cooking the books legally. They are using something called netting and bilateral netting. A legally enforceable netting agreement between a bank and a counterparty creates a single legal obligation for all transactions called a netting set under the agreement. Therefore, when banks have such agreements, contracts with negative values. Okay, look, negative values means an amount that they would pay. Negative values is an amount that a bank would pay to its counterparty, can offset contracts with positive fair values. And positive values is an amount owed by the counterparty to the bank. All right? So the amount owed is down by 18.9%. I'm sorry, I got that a little mixed up here. Let me adjust this. This is in billions of dollars. GPFV decreased by 5.8%. All right. And the gross positive fair value represents the initial measurement of credit exposure. Their exposure is only down 18.9%, but the amount owed is only down 20%. That's not good enough when you account for the fact that their quarter-over-quarter revenues is down 40% and 38% for banks and holding companies of those banks, respectively. Understand? It's less than half. They're only able to get rid of half of the amounts in exposure as they're actually able to as they're actually losing in revenue. That's not good for them at all. What does this mean for the stock market when companies lose assets? Junior hedge funds and senior hedge funds get margin called. What happens when a margin default happens? They have to sell off their assets, their ETFs, their bonds, their RRP, their investments in all sorts of different 3-month, overnight bonds through the government, through blue chip stocks. What does that mean for the stock market? That means that stock market assets, blue chips, stocks that you know and love, regular stocks like, maybe Google, for example, Facebook, things like
Tesla.
that, are likely to tank because the stock market is going to be losing a lot of value from these junior hedge funds and senior hedge funds that are getting margin called. So they've got to come up with liquidity, and they do that by selling assets. All right. Now, I'm not a financial advisor, but I am in the process of getting my Series 7 securities brokerage license. So I think I do have to disclose that, but I'm not a financial advisor, and this is not financial advice. Negative beta is what it is. A beta less than 0 indicates an inverse relation to the market. So what that means is when the market goes down, something with a negative beta would go up. And when the stock market goes up, something with a negative beta would go down. All right? That is possible, but it is unlikely. Some investors argue that gold and gold stocks should have negative betas because they tend to do better when the stock market declines. Yeah, they sure do. And so do other things. Like, let's see. Oh, yeah, AMC. AMC Entertainment over the last year shows a negative beta of 4.65. This means that it's like a 4-to-1 difference for every 1% that the stock market goes up or down. AMC changes in the opposite direction about 4%. I'm sorry, I should say about 4 times that amount. So yeah, about 4. Yeah, that makes more sense.
GameStop's at negative 6.97.
Bingo. GameStop shows a negative beta of 6.97. It runs even more adversely to the market than AMC does. Despite being a stock may have negative beta, which means the stock moves opposite of the general stock market trend. A stock with beta lower than 1 is expected to rise less than the market when the market is moving up, but fall less than the market when the market is moving down. That is a great fucking sign. When you take into account everything that you've just seen here and the sorry ass fucking state of our economy and supply chain and 100 ships sitting off the coast of here, the lack of people that are actually working and that want to work for the amount of money that is currently being offered, as well as basically the vaccine mandate by the Biden administration that has caused those millions and millions of Americans to quit their jobs in the last 6 months, or should I say in the last couple months, because we were already seeing 4 million leave in July and another 4.1 million, 4.3 million in August. I wonder what September is going to look like. 4 million Americans nearly quit their jobs in July. That was 3.9 million Americans quit their jobs in June. That's pretty fucking bad.
So to go back to your negative beta, so VIX, I'm going to use that one. That's an inverse ETF, right?
Please do.
So it always runs, it's opposite of S&P 500. So its average negative is 6.37 to give a reference point to what AMC and GME look like as a inverse to the market.
Mm-hmm.
So yeah, a actual inverse ETF, something that is notoriously followed to be a counter to the S&P, Sits at a negative 6.37.
The
What did you
VIX?
say? The VIX, yeah. And GameStop's
Exceptional.
at a
And we've
negative
all seen how that
6.97.
moves. We saw in October 28th of 2020, the VIX was up at 40. You know, and it is currently sitting at a 15.49.
Well, that was from when they did the. Wait, no, never mind. I'm gonna shut up because that was the UVXY I'm thinking of. That they did the reverse split. Never mind. So just ignore that comment.
No, not at all.
Yeah, the UVXY got too low. I think it was like at $3, and so they did a reverse split, 20 to 1.
Now, lastly, before we thank you very much, Kenna, for that information. That's absolutely a great point. I wanted to bring up that for those of you that are unaware, the Shiller S&P 500, sorry, I should say the Shiller price index is also known as the cyclically adjusted price earnings ratio. Okay, this basically takes into account for inflation the price to earnings of the S&P 500. And when this is at highs, it means that the stock market is overvalued. And when it is low, it means that the stock market is undervalued. Okay, and as you can see, as of Wednesday, October 20th, that went up by almost 0.4% in one day, the S&P 500 PE ratio. Okay, it's the price to earnings ratio based on the last 12 months as reported earnings. This is just the S&P 500 PE ratio, okay? And the Shiller PE ratio is the price earnings ratio based on average inflation, adjusted earnings from the last 10 years. That's why it's called cyclically adjusted price earnings ratio, CAPE or Shiller PE ratio from Robert Shiller, the Nobel laureate. Now look at the only time it's been higher than right now when it's at a 38.63, up 0.37% yesterday. The only time it's been higher was right before the 2000 dot-com crash. That means that the stock market is, of course, as you know, at all-time highs, and it is so fucking overvalued that the only time it's been higher was the dot-com bubble. And previous to that, it was 2018, and then Black Tuesday in 1929. With the amount of derivatives that we have now, total derivatives of $426 trillion, the debt ceiling crisis that we're having, the supply chain issues, the eviction moratorium, the reduction in real estate prices that is coming, the amount of people that are going to be losing their homes or getting kicked out because of the end of the eviction moratorium, the lack of employed workers, the vaccine mandate that is keeping people from going back to work. We're seeing a fucking very, very sad state in our economy right now where even if the debt ceiling crisis doesn't destroy our fucking economy, the rest of these things that are occurring, including Evergrande bank bonds that are causing bonds worldwide to go negative, including American bonds, 3-month bonds in America are at 0.04%. 10-year bond yield is at 1.56%. And at this point, the way that the economy is, that the higher the 10-year bond yield goes, the more of a sign it is that that the stock market's about to crash. So we're in really fucked up shape. Let's move on to the technical analysis. Zabi, you want to pull that up, brother? If you're still awake.
Yeah, I'm here. Of course.
Cool. So yeah, thanks everybody for being patient and sitting through all that. We've been at it for a little over an hour. I hope you found some value in that information. Thank you to Kenna and Zabi, who've been hanging out with us here from the Bull House.
So I started a stream on Discord.
Awesome. Here we go. Let's watch Zabi's stream. He's got some technical analysis going on over here based off Fibonacci, looks like. Hang on, let me turn this music off, brother, so people can hear you.
Alright, man. So, first of all, I have this video here by Robert Preacher. He's a American financial author and stock market analyst.
I've heard this one. It's pretty good. Toss it on.
Known for his financial forecast using the Elliott wave principle. What he did is he reintroduced it to he like much of the reason the Elliott wave is known now is because of his efforts to reintroduce it.
Mm-hmm.
And listen to what he has to say here.
Put numbers on it, and if you haven't been introduced to this before, you might wonder what they are. The Fibonacci sequence shows up throughout living things in nature, plants, animals, and so forth.
Turn it up. Can't hear.
You can look it up and study it if you like. And I think it is
Turn it up, brother.
a factor involved in growth systems.
It's on maximum now. Can
you
you
click
check the Discord stream volume? Like
Yeah,
in
I'll
the
turn.
bottom right corner.
Go ahead. Go ahead and click it. Play. I'll turn it up all the way.
And that includes human societies, which are just in nature.
Oh, I can't hear it. I'm sorry.
And we're going to start with the stock market. But before I do that,
Oh, you can't hear it?
No, and it's not coming through. Hang on one second. It's not coming through on. I can see it on Streamlabs that it's not coming through fast enough. Could we skip it though? And could you just explain what Elliott wave is, briefly? Because I can't hear it at all, and I know people can't either because it's barely showing up on the desktop audio.
Alright, no problem.
The Elliott wave principle is as follows. It's a theory used for technical analysis using various impulse waves.
I'm sure a lot of the people watching are familiar with it, and a lot of people that are on YouTube use it.
But I want to make sure that everyone, even beginners, are aware of what the heck we're talking about, because this a lot of people are not. So we got to keep in mind. Got to try to show
Alright,
everybody.
how about I send you the link to this video, and
Go ahead.
because I think what he says around here,
Link it.
from the 2-minute to 8-minute mark is the part I was trying to show.
Dude, I can't play a 6-minute video. Everybody will fucking leave, man. I'm being honest with you. We gotta move. Explain it briefly, and then we can move on. I guarantee you.
Alrighty. Oh, okay. So
Even just show us the Wikipedia on it or something, and just read that for us so we know what's going on with it.
my main points here are there was this guy known as William Delbert Gann.
He was a finance trader.
So on Investopedia here, it says, predicting the future is impossible, right? If he were here today, W.D. Gann would beg to differ. His prophecy is believed to have happened during World War I, when he predicted on November 9, 1918, abdication of Germany's
Germany's Kaiser. Wow.
He also made other, and he has a book named Tunnel Through the Air, which pretty much predicts Pearl Harbor shit.
The Japanese attack on Pearl Harbor? That's insane.
He doesn't say that exactly, but if you look at the book, he mentions something about the 1,000-year cycle, which should not be completed until this part, and coincidentally, this is when the Soviet famine happened, and he said that the United States will have a bad period in 1940 to 1944.
Oh, he called it.
He wrote this. He wrote this in 1921.
Holy shit! In 1921.
Yeah.
And he was using Elliott wave theory.
Or 1927. My bad.
Ooh, who cares, man? That's he was 15 years.
He developed his own methods of
Oh, okay, cool.
Of studies.
Gann studies.
Which, look, you've heard some people on
market
YouTube
time factor.
mainly Astro talk about cycles and time is price, right?
Mm-hmm.
It's been in front of us all along. Look,
price, time, and range are the only three factors to consider. Price, time, and range.
Markets are cyclical in nature. The markets are geometric in design and in function.
Cycles explained. Price, time, and range are the only three factors. Markets are cyclical and geometric in design and function. That's how these guys, that's how Elliott wave, that's how these Pythagorean theorems and these Fibonacci sequences work. That's what these algorithms are based off of.
And there's I encourage people to watch this video as well. He used astrology for his charting. Did you know? Like, this is the craziest part.
Wow, really? I didn't know that was possible.
It's crazy,
That
man.
is sick, dude. Very cool.
He is very famous for that shit, and he was also a 33rd Freemason.
Any chance you happen to have it? You happen to have some TA pulled up?
Yes, sir.
Ooh, he's got some TA for us, guys. I'm excited as shit. Not gonna
So
lie. I love Zabi's TA.
to my surprise, his fucking
Hey, Zabi.
his
Hold-
tools were
Mhm.
inside of TradingView already.
Really? How the fuck is that
Look.
possible? Whoa, shit. Holy
Look
shit.
right here.
I could see the cycles already.
Box,
Hold on, brother.
Gan
Hold on, brother. I'm doing something real quick.
Gan
Hold.
fan.
Hold that. Pause. Okay, pause. One moment, please. Wow. Can you zoom in a little bit, please? Just before we continue. I need to get a visual of this. All right, brother. You're blowing my fucking mind here. All right? I'm not going to lie.
Using his tool named the Gan fan, if you plot it from the low before the next low of the before the next run up, here is the white one. The green one is the low before the June run up, and the next low. Together, they create this channel right here.
Say that one more
which
time,
is-
brother. Say that one more time. I'm kind of buzzed. I've been drinking. It's fucking 3 in the morning. I've been up since 7. Talk to me like I'm stupid.
Hey, no worries, man. Fuck. I
didn't mean to
used
cut you
this
off,
tool
brother.
right here.
Go ahead.
No worries, man. I used this tool right here, and I'll do it again. Oh man.
God, we're gonna be so fucking rich. Holy shit. Did I say that yet today? We're gonna be absolutely stinking fucking rich. This is ridiculous.
So I drew it from that low to the next low, right? This is what you see here. This first spike is January. And do you see over here where it says 1-1? And then 1-2, 1-3, right? Anyways,
Hey,
when you
nobody
plot
needs you in the chat, man. You can get out. Peace out. Go ahead, brother Zabi. Keep it going, brother.
when you plot two of these together, when you do both of the cycles, when you apply the Gann fan to both of the cycles, you end up with this channel right here, which is both the 1-1 here and the 1-1 right here. They both create this channel that we follow for a while, which is trippy. And in my prediction, we will enter that channel again sometime soon. And it's in that range. If you can see the price is in the $90 range right now. As well, the orange bars here are very interesting because this lands on October 26th. October 26th again. And has a different version of I'm predicting this for next week.
My brother, let's say that one more time for the people in the back who don't know what the fuck's going on, all right? Let's see. This is what we... Look at this fucking beauty. All right. Where's this one from?
So I shit you not, I drew these blue lines 2 weeks ago.
Well, would
And
you
look at where
that?
they intersect.
Would you
October
look at
28th.
that? October 28th.
And this
huh?
looks like a fucking perfect cup in
Cup and
handle.
handle. Yep. Read my mind, dude. Technical analysis is not a perfect science. That's why not everyone in the universe is a fucking millionaire. If everyone in the world would be a fucking millionaire and billionaire if technical analysis
If you
worked
use
every single
a
time. It's just an indicator to help you make a decision,
true,
not to tell you what to fucking do. So, Zabi, I just wanted to say that to some people.
it's definitely
Some
it's
people need
definitely
to hear it.
useful because if you use a trend-based fib extension on GameStop here,
Let's see that Fibonacci.
you can see how important these levels are. We bounce off of it multiple times,
A lot. We're looking at
and
GameStop right now, by the way.
not only that, if you look at the 0.618, which is one of the key levels, is the golden ratio.
The
You
golden
can
ratio.
see the both
Math,
of the peaks
motherfuckers.
here.
That's what algorithms and computers run on. Zeros and ones. Binary. Math. That's fucking it.
Yeah, look for something exciting to happen towards the end of this month. What's also trippy is
Oh, yeah.
I've been digging.
Explain it again. Explain to me how these correlations here for people that can't see it the way that we, like as clearly as we see. Because I can see what's going on here, but explain to me how we're coming up with this using the Fibonacci.
The GAN studies say that the markets are cyclical in nature. The markets are geometric in design and function. Price, time, and range are the only three factors to consider. He made a lot of money in the stock market. He was
He predicted the fucking Pearl Harbor practically. What else did he predict?
He made it.
The
He made a lot of
abdication of
predictions.
Germany's Kaiser at the end of World War One. Holy
And
shit.
he talked. He had another book called The Law of Vibration, where he talks about
Impulse waves?
cycles.
Cycles. Oh shit. Oh, he does.
Hey guys,
Look,
what's up?
look right here.
Hey, Kenna.
chat's asking if you can show GME in the same way.
Oh, we
If
were
it's
showing
possible.
GME, but yeah, we'll show it again.
Oh,
Yeah, we'll
yeah.
show it again. Fuck yeah.
I'll
Yeah, well,
show
so
it
we
again
were
in a
just showing you
second.
GME just a moment ago, but we'll do them both here in a second. But here, look, he's explaining GAN's cycles right now. This is what cycle theory's derived from. Things like
I love
this,
cycles.
you know?
Cycles, always.
It's fucking awesome. It's algorithmic trading. The computers can only understand patterns. And
This
what
is
better
from the
patterns than mathematics?
1920s.
Exactly.
This is from the 1920s, yo.
Because math is a universal language that has been known for thousands of years. It's as simple as
Everything works according to past cycles. History repeats itself in the lives of men, nations, and the stock market. He used astrological and astronomical as well as numerological methods. And if I'm going to show you some pictures from here. These are the kind of charts that he used. Square roots of numbers. He mapped out the movements of planets, and he says when the movement of the planet is equal to the price, that's when a major move happens.
Oh, shit.
For example, the movement of the moon
Astrology
every
too.
hour. Yeah. Encourage people to watch this video because it's fucking trippy as shit.
Yeah. Yeah.
Lunar
absolutely.
cycles. Google here.
That's Google based off
Yes.
lunar cycles. That's awesome. And it
Fucking
works
Dow
too.
Jones somewhere here.
Yeah.
But anyways,
crazy.
yeah, look up fucking
Everyone check out
William
Gann
Gilbert Gann.
cycles. Gann. Gann cycles. William Gann. He was a
Yes,
trading
sir.
legend. Wow, that blows my mind, man. Woo.
This looks identical to something a guy named Produced by Welch made by
Yeah.
himself.
Yeah, I was watching Welch on Astro stream. I was in the Discord with them, just kind of in awe.
Yeah.
As a
He fucking
spectacle.
came up with something exactly like this based
Mhm.
on his studies about the Mandelbrot set.
Mhm.
And look at this. This
Pretty
is
dope, man.
W.D. Gann's research.
It's dope. Run us through yours one more time, so for the people that didn't see it.
And the reason I was trying to show this video right here is because this guy was using the Fibonacci to track the markets all the way from back here, right?
Mm-hmm.
And he says that something major is the big turn is gonna be in 2021. I sent you the link to this video. You can watch it
Okay,
on
cool.
your own and
Where'd you
then
send it
talk
to me
about
so
it
I can give it to
on your
people?
next stream.
On Discord or on messages?
Yeah, Discord. I messaged you.
Thanks, brother.
See here, it ends on 2021, and again, this guy basically helped the Elliott wave theory become famous. He's wrote
Robert
many books.
Preacher. Got you.
And to finalize my point about all this, we fast forward to today about how they use these algorithms, right? We know that these algorithms, like, they make it obvious. They're called quants. Obviously,
Yeah.
it's like based on quantum shit. In a recent interview with Trades, Dave Lowers mentioned how they use lasers. And in recent papers about theory of physics and the universe and shit, in this paper I come across this. This is a self-repeating algorithm. Ends up looking like the human brain. My main point here is that this thing right here looks like the Mandelbrot set, and it talks about time. Remember, time is price?
Yep.
How does it relate to time? What it says is that in the base.
Whoa, what happened? Nah, cool. There we go, we're back.
The many histories can be interpreted as the different meme stocks. But the
Hold on one
algorithm
second.
determines all of them.
Hold on 1 second, man. Could you repeat that? I dropped connection for like 10 seconds. Repeat like your last 2 sentences.
No worries, man. I was just saying that according to this, what it says is that the basic statement of the model is that there's not just one path of time, there are many paths of time and many histories. Combining with this all the other research, I interpret it as time. You know how they're buying time, right? They're just kicking the can as much as they can.
Yeah.
And
Yeah, they sure are. That's the algorithm's game right now, is to stretch out time as long as possible to try to, discourage people out of it. That's its best chance of winning here, and they're running out of.
And you know how
opportunities.
there's in the recent report they mentioned that there's more than 100 stocks that were like surging during
Heavily shorted.
January.
Right.
So yeah,
And we all heard
the model, the rule that is used, the rule being the algorithm, determines all of them. And even if we think that we're following an independent path of history, the history is time and price. It may actually merge with another path. When they squeeze together.
Fuck yeah. Show me the TA again. Gotta see it.
You see it?
Yeah. Zoom in, explain it to people here a little bit if you can.
1 second. Oh fuck. Okay. So the guy I was just talking about, W.D. Gann, his tools are actually fucking available in TradingView. TradingView is for you guys to download if you're not familiar with it. And if you use the Gann fan here, and you plot it so you start from the low before the January run, and then you make the second point, the low before the June run, you get such a model. And then let's do it again from here to the low after the June run, which would be 28.
चैनल की सभी अपडेट पाने के लिए
29, I mean.
Holy shit.
They create this channel, right?
Yeah.
I had it more on point earlier, but you can see it here.
Yeah. I know
And
which way you went.
they're both the 1-to-1 ratio channel.
Can
And
you
if you
adjust
can,
that one? Can
you
you
can
try to
s-
adjust that one?
you can
possibly?
see. What do you mean?
Can you remove that one and try to adjust it right there?
So the point is here that we could re-enter this as I see it as a very significant point.
Mm-hmm.
And right now,
What's the name of that? What's the name of that tool that you're using? People are asking in the chat.
it's called GANN fan. It's right here
Oh,
in
it's
the
GANN fan. Oh, okay. So
Yeah.
GAN fan. GANN fan,
Yes.
named after WD Gann.
Yes, sir.
Okay, great. So can you let's see moving forward in time, what is that showing us as happening next?
So because he's I've been really fascinated about his work, and I looked at some astrological movements myself. I looked at the positions of the planets
Okay.
on both the January but the January run up and the June run up, and I noticed I noticed a correlation between how the moon moves. There was 4.5 cycles between here, and
Time.
if
Yeah.
the
time.
next
Makes sense.
the next 4.5 cycles after that
Mm-hmm.
coincidentally land on October 28th.
I see. And what was going on then? October 28th.
You see,
What's happening October 28th?
I'm
you think?
getting
Or around that
I'm
time?
getting multiple indicators that I'm thinking we're gonna see a huge run up towards the end of the month.
Oh shit, did you fucking hear that? Because I think we're gonna be so goddamn filthy fucking rich. Holy shit. I like that.
For next week, I think we're gonna hit 50 towards the end of the week,
Oh, I like
because
that shit. I wouldn't
AMC
mind that.
is a fucking fractal that just repeats itself over and over and over again. If you don't believe me, look at this.
Shit. Let's see. I believe you, but I want to see. Show these people what the fuck we see.
So
Hey,
I go on the
Faraz
weekly
Mirage.
chart here,
Thank you.
and we're gonna use a tool called the bars pattern. Where is it? What I'm gonna do is I'm gonna plot the chart from here to here. So we have the chart here, and now we can manipulate it. Look. The AMC is either always inverse, a copy, or flipped or mirrored of itself. Whether you're on, like Astro
Holy
said,
shit. Yeah, you ain't lying.
whether
That's
you're
fucking
on the
awesome.
weekly,
It looks like a
daily,
vortex
4
indicator.
hour, 2 hour, 1 hour, 1 minute, doesn't matter. You're always going to find fractals and copies of itself on every time frame. Now look at if we do it from
That's super bullish right there.
here. We do it from January to June. And we move it here. Again, look at it. We can't make this shit up.
Oh yeah, that's perfect.
It's stuck in an infinity loop.
How's our volume looking today?
Died down again, but if you look on the daily here,
We need volume.
we're looking good, man. Perfect cup and handle right there. Multiple like I
Time's up
plotted
to about
these out
2
on
minutes.
different days. Yeah, they're all lining up, including the fucking moon cycle, including these other cycles. This orange line here. Look how it lines up. Oh yeah, so GameStop.
Yeah, oh yeah.
This is
Why
called
not run it up here? That sounds like fun.
Trend-based Fib extension, Fibonacci extension.
That's right, Pam. We're gonna be fucking rich.
And as you can see, the golden ratio, the 0.618 line, is very significant. You can see both peaks hit that line. And we can see that we like to bounce off the bottom here. And if you notice something, the price is hovering in the middle of this zone. It's pretty much right in the middle. And
That's cool. Oh shit.
yeah, I mean, that's pretty much it, I think. Unless I'm forgetting something.
No, I think it looks pretty cool there. Where do you see us moving on GameStop over the next few weeks?
Oh yeah, thanks for reminding me.
Any indicators there?
So again, I'll show you how the trend-based Fib extension is trippy. So if you use it for January here, right? You see you have this low, high, and then next low. If you did this on February 19, 2021, you used this tool, and you did exactly what I just did now. The 0.3618, that key level again, tells you 71.
Holy shit, it sure does. Holy shit. Okay, so you just used which indicator?
Trend-based Fib
The
extension.
trend-based Fibonacci extension. Clearly
And look
pointed
at
to the $71, $72 mark on the top of the third, 3.61, the fucking pi, the one equivalent to pi. Gee, surprise, surprise.
And look
It's
at
not 3.14, but it's
1.618. Look at 1.618. It's also an important level that we bounce off of multiple
1.618
times.
is the bottom of the candle. Holy shit. So the first to third Fibonacci sequences. Show us what happens on the...
Here's the kicker.
Let's see.
Look at the purple line on GME here. Ready?
Yeah. Oh, I'm ready. Hold on.
1742.
Say it again.
17 motherfucking 42.
Damn, we might be going to 1742 on GameStop, baby. You heard it here first from Zabi. Never know what the
It's
fuck's
gonna
gonna
be a
happen
key
next.
level. That's all I'm saying.
Ooh, 1742. Man, why'd you close that shit out? Leave it up there, brother. That thing was sexy.
Hey, right there.
It was sexy. Look at that. Look at that. So if you use the same Fibonacci trend line indicators that we used previously to come up that equal the same January run up, today you're looking at a potential low of $800.74 for GameStop to a potential high of $1,742 on GameStop.
Yeah.
In the near term future. Now, this is not financial advice. This is just technical analysis on our part and the way that we see it. And thank you very much, Zabi, for that fucking information, brother. Can you show that to me on AMC? Because my fucking tits are jacked. We're going to be so goddamn fucking rich. Goddamn, my shares and my call options. Holy shit. Woo! I mean, I'm already rich, but I'm really fucking stinking rich.
I encourage everyone to get TradingView and play around with these fib extensions yourself, because
Listen to this man right now. Say that again, brother,
it's
for the
not
people
as
in the back. Say that again.
I encourage everyone to download TradingView or whatever has these tools and play around with them, because it's not as complicated to use them as you think, and you'll quickly find correlations. And correlation does not mean causation, yes, but correlation is correlation. There's always connection there, right?
Yeah, history has a tendency to repeat itself.
And you can't look at these lines. You can't make them up.
No, exactly.
Like, they respect those lines. AMC on the daily, they respect the fucking levels. They're key levels. The Elliott wave theory is all about how institutions accumulate and shake off the people at the highs by if we do this if we do the same extension for the June run up, we get I'll consider this the low.
No, down. Wouldn't it be the next one, you think, dude?
262 from 135 to 262.
Do me a favor. Can you zoom in back over there? Can you do that trend line again? Can you go back to it? Why'd you grab that one, and why did you grab the other one over there? That seems like a more respected resistance. Here? No, down further to the right on the green. Go back to where you were.
Well, technically, I should be doing it from here.
Then do it from there. Why would? Oh shit.
270 from look 142.
So we're looking at a possibility of a low of 142 on the 1.6.
And isn't 145 a key level in the option
call
book?
Options. Holy shit.
Yeah.
Gee, I wonder if they made $145 call options for a reason. So we're looking at a low possibility of 142.76. Scroll up for me, brother, so I can see what the fuck's going over there. Don't make the chart smaller. I like that. Just kidding. What does that say? 270.
270.
So we could be seeing between $142 and $270 potentially on AMC here in the near term future. Fuck yeah! Let's go. Let's go. Love technical analysis.
Yeah, my tits are fucking jacked as well. Shout out to fucking Astro, Edward, David Marino.
Shout out to Astro.
Learned a lot from these guys. And
Astro, Edward, Britchick, David Marino, absolutely. Zabi,
as well as
right
you, man. Shout out to you. You're fucking awesome. You like talking about shit nobody else does.
Thanks, brother. We got to do what we got to do here. We all contribute our part. And I think that's fantastic. So yeah, if you respect the Fibonacci trends, we could be seeing from 142 to 270 on AMC, and we could be seeing as high as 1870 on fucking GameStop. My tits are jacked. We're going for a ride.
Yeah,
Kenny Griffin, where's my fucking money? My goddamn fucking money.
We gotta make that track, yo.
I want my fucking money. Money. I want my fucking money. Gary Gensler. I want my fucking money. Money. Gensler.
You got any more? Or you all done, brother?
I want my fucking money. I want my fucking money.
What do you think, Zabi? Should we wrap it up, or you got any more?
I want my fucking money.
I just want to make one more point about Gann, is that he published several books, and he was one of his books was hailed by Wall Street as his best work. So yeah, he was definitely recognized. He was,
His book,
again,
Truth.
33rd Freemason. Fucking made a lot of money based on the charts that he used, you know, all this astrological shit.
Fantastic.
Look
sure
this
you guys
guy
check out
up.
William Gann, Gann.
And yeah, don't forget
Robert
this
Preacher.
video. Watch this as well.
Don't forget Market
2021
Forecast
important
2021,
year.
Robert Preacher.
Yeah, man. Thanks for giving me the opportunity to show this and share.
Oh, thank you for coming out. Thank you, Kenna and Floyd and Silverback, Zabi. Make sure you guys catch them on Twitter and on YouTube, anywhere. I'm sure something will be around. We'll be on the Bull House on YouTube. We'll be on Astro's channel. They'll be on Boss Blunts Think Tank. Join us again. Sorry, guys, we're not doing Sundial. We do AMC and GameStop over here. We keep it real. We are apes. Sorry if you like other stocks.
Booga booga.
That's fine. I like other stocks. I like stocks that give me the potential to make the most fucking money possible. And for right now, I know what those are. To each his own. Peace and wealth, everybody. Love you guys. Thanks so much for coming.
Gary
Good
Gensler.
night.
I want my fucking money.
We're gonna be so goddamn fucking rich. Holy shit.
I want my fucking money.
I love it. We're gonna be so fucking rich. It's crazy. Holy shit.
Gary Gensler. I want my fucking money.